So maybe just to kick off, Sunstone Capital is a operating asset rental fund. What we do high level, and I'll go into a little bit more detail as we progress. We buy assets, and there's quite an array of things that we do, and we rent them out to various businesses and operators in South Africa. And maybe just to kick you off with a little bit of an understanding why asset rentals exist in general, there's a huge credit gap in South Africa, which basically means that if you're a business here, it's quite hard to get debt. And there's quite a number of reasons for that. If you're a traditional SME, you go to a bank and you need to present financial statements, you need to have securities, you need to offer quite a sophisticated package to them for them to approve you. And it's gotten more and more difficult over time. The reason for that is that credit is assessed based on the off-taker. It's based on you as a business, and they don't really take a look at what you're using that funding for. So asset rentals come in where you're actually able to take a more of a blended view. So you take a look and you say, okay, what asset are we buying? Oh, it's a commercial fleet vehicle. Cool. What's this vehicle going to be used for? Okay, we're going to lease it out. It's going to be leased out to an Avis commercial fleet. So South Africans who run small businesses and they need to rent buckies or whatever it may be from time to time, they're going to use this. We're able to look at the company and its financials and all the normal stuff that a bank will look at, but we're able to focus more on the asset itself. This is a bucky. It's got a market value of X. It's quite liquid. We can sell it. They trade every day. And in doing so, we're able to offer a slightly different view on how to get access to that funding. We can be a lot more quick. We can be a lot more responsive. And we can take a very different approach. And I'll unpack some of the types of assets we've invested in and how they're all different. But that flexibility, that creativity really helps. Timing is a huge component of it. If you're an SME, you don't need to apply to a bank and get your commercial vehicle, get your billboard, get your medical equipment in 6 months' time and fight with your private bank on the phone all day. You've got a solid business case. You've got a track record. You've got a good asset underpinning whatever you're going to be lending. Why not just go for a rental? We turn it around a lot quicker. And the nice thing is that it's off balance sheet, and I'm not going to get too technical, but that basically means there's some tax advantages as well. So that's why asset rentals exist. I mean, big businesses use them. I was chatting to one of our partners who actually rents out assets to Planet Fitness. You would think it's a large, sophisticated company, but it actually makes sense when you really get into it. The flexibility and the timing of everything can make a rental really attractive, even for bigger customers, not necessarily your small guys who don't want to deal with the bank. So there's a really compelling case as to why asset rentals exist. Maybe just to touch on what we do at Sunstone. We maintain ownership of all of our assets. So what we do is we will buy something, and again, I'll touch on what that is, but it'll be ours, and we will rent it out to an off-taker. We'll rent it out to a business which is operating in South Africa. We'll obviously check them out, make sure we know what they're doing, and evaluate the asset, its liquidity, its market value, its retail value, what it holds, how it works, all the rest. What's quite interesting about the way we do it is we focus on niche sectors. So on the next slide, I'll talk to a couple of pages, a couple of lines, a couple of various things that we've gone into. When we go into something, we really take a deep look at the industry. We try to understand what's happening. Let's say it's the medical industry. We understand all the different types and tiers of practices, who the players are, what's happening in dentistry, pathology, radiology, and who's doing well and why they're doing well, and how can we evaluate it and which areas are good. So we get really technical, we get really involved in these niche sectors and come up with cool and creative ways to help the people in that sector. This gives us quite a quick turnaround time. Our rates are all risk adjusted, which basically means we don't have a fixed rental where we just hope everything works. We take a look at the business. We say, what can it afford? What's our risk? If we want to proceed with the deal, what's the risk-related rate? And there is a very, not the hugest range, but we do take a look at each and every one of our customers and understand what's going to work for them and how it's going to play out. And really what happens here, which is quite interesting, is it's a rental business, which means we get paid every month. We don't take a stake in the operators of this equipment. So we don't take a view on a doctor practice. We take a view on the machinery. So we earn stable, dependable yields every month. We know we're going to get paid. Whether the doctor's doing great or not so great, it doesn't directly affect what we charge. And that gives us quite a lot of stability. And the fact that we own the asset throughout, that it's our piece of machinery, if we ever run into issues, we know we're quite safe. So maybe just to run through one or two of the sectors that we focus on and the things we've done Medical asset rentals is a huge focus for us at the moment. About 14 months ago, we realized that although the banks used to be the de facto place to go and finance a medical equipment or medical practice, rental market would really have a nice opportunity here. We partnered up with a bunch of very interesting players in the medical space. And over the last 14 months, we've done north of 30 transactions with them, ranging from dentistry, pathology, radiology, even beauty, healthcare, veterinary. It's been unbelievable. And we've just seen such a huge demand and such an excitement. And a typical example of this would be one of the first transactions we did was a dentist, a wonderful guy. He was in a dentist practice that was turning over in excess of 6 million a year, which is quite good for a dentist. And he was looking to open his second practice. He banked with one of the big reputable banks who allegedly fund everyone, but they weren't prepared to take a view on the equipment in his new practice. And he was battling for months and months and months. We took a look at what he was doing. We looked at a practice management company who we work with. We built a budget. They looked at the area, his qualification, where his new practice would be, everything. They put together a very accurate set of budgeted financials. We took I think it was a 65% loan to value, which means he offered additional security in addition to the equipment that we provided. And we rented his equipment. We turned it around quite quickly. Now that practice, his second practice, is doing phenomenally well. He's doing great. He's come back to us for more and more machinery. His initial bank or finance partner came to him and tried to buy the deal off us later, because now after 6 months they decided, we can take a view. But they weren't there off the bat. They didn't understand it. They weren't prepared to take a sophisticated look on him. And that enabled us to help him build his practice quickly, build a great relationship together, and hopefully a long future. We do commercial fleet vehicles. We rent our vehicles to the likes of Avis. That's actually how the fund started. Initially, there was very much a focus on these buckies, commercial fleet vehicles, and just helping them deal with, the administrative nightmare of owning over 1,000 vehicles in a franchise. And every time a vehicle needs to leave the country so that a plumber can go fix a pipe in Zimbabwe, you have to wait a week till you get feedback from the bank and cross-country clearance letters. And we took a lot of that administrative burden off of them. And that flexibility, once again, helped them really grow their business. We've got a managed Uber fleet, which is performing really well, large equipment, outdoor media assets, similar structure. We came in, we took a very secure view on an array and a large portfolio of outdoor media. It's been brilliant. The guys subsequently, we wish they'd come back to us again, but they've been able to grow their business in such a meaningful way. The banks wouldn't take a view. Now the banks are funding them years later, and we're happy with that. They pay us on time every month. We have an unbelievably secure transaction and a great partner on the other end. So that's the kind of things we do. Just to briefly touch on the team, it's Amaresh Chetty, Jeff Miller over here, Stan Madali. Stan's got an amazing insight into the rental industry, being in a number of these businesses over time, and myself. We've been around for a couple of years, and we have a track record of stable, consistent, dependable yields, even throughout COVID. When interest rates dropped 2%, and in theory that should have affected us, we're still able to deliver dividends north of 6% year on year. So we're really comfortable, that our initial investors are going to hit their milestones, and at the same time, we are confident that new investors are going to get the same benefit. We have deployed within 3 to 6 months of every single capital raise. I think we'll be out now by the end of June, maybe mid-July. We should be fully deployed as well. What we are, for a high-risk investor, is looking for an attractive, high 12J yield. We're not that fund. That's not really where we play. But if you want a stable, dependable yield, you want a nice, safe play, that's where we are. That's why we were the first fund, the first Section 12J fund to get approved and registered on the Easy Equities platform. They loved our bankability. They loved the stability of our yield and the liquidity and the fact that we own and hold these assets. We are offering a funded option, but I think I'm running out of time. So maybe that'll come up in Q&A.
Okay, thanks, Avi. So I think we have, please expand on your funded option, because I think it's very, very important now that, that this is the last opportunity for investors to take advantage of the tax shield, that they are, that they understand what options are available to them.
Absolutely, Jeff. So our regular investment amount, our initial investment amount starts as low as 105,000. But for those who do invest over 500,000, you can put a 5% deposit down now. You'll pay a 45% later on in February next year, and the remaining 50% the following September. So that means that if you aren't in the position to commit all that cash right now, you can stagger it over time. So you still get your full Section 12J deduction this year. You'll be an investor as of 30th of February, and you'll pay us out over time. And we will obviously charge you an interest rate so that other investors aren't prejudiced. But interestingly enough, Jeff, I ran the numbers, and for those investors, the yield's a little bit higher just because of the timing of the cash flows, and you're not putting everything out on day one. So really an attractive option for those who are willing to make a more meaningful contribution and want to be a part of us on this journey. I think a funded option is quite exciting.
Thanks, Avi. I've got a question here from Ricky Lantz. He says, how much does your fund have currently under management, and how much are you looking to raise?
So we have got just over 45 million under management. We're looking to raise another 20 in this capital raise. We've also been approved and approached by the banks for various forms of debt. So that's going to be our next thing. Our current pipeline of equity will never be able to match the deals that we've got. So we're going to bring in gearing, which is also, I guess, a nice little boost to investors. We think it'll give an additional 2 to 4% over and above what we're modeling and marketing in terms of our return profile.
Okay, great. Thanks, Avi. So I understand that you spoke about a dividend being, which you declared today to more or less 6%, which is on the high side in terms of Section 12J. What is the overall IRR that you're wishing to give back to investors?
So investors will get an 18.3% IRR in our medical class of shares, and about an 18% on our diversified portfolio fund. And that's made up, again, there's a dividend yield in the general fund of about 7.5% targeted a year. And in our medical fund, it ranges from 6 to 10% a year.
Okay, thank you, Avi. So thank you for joining us today. I mean, I think, as you know, I'm a big fan of your fund. I think you've done unbelievably well. I see the collections coming through every single month, on time, every time. It's actually a pleasure to have watched your growth in the industry, and you're building the fund to where it is. So best of luck for your capital raise.
Thank you, Jeff. Thank you, Grovest, for having me. And thanks again for the conversation. Thank you all for joining us. Always nice to be a part of this forum.
Good. And we have had just one more before you go. I have a further question here for you from Lucindinso, who is asking, is there an auto assembly plant financing fund to finance the vehicles, bakkie and sedan, as they come out the assembly line?
So there isn't such a fund. It is actually would fall within our mandate. So please feel free to contact us. Again, we deal in the underlying assets. There could really be an interesting play. We'll take a look at you. We'll take a look at your business. We'll take a look at the vehicle, and there may be a way to work together. So please don't hesitate to reach out. I'm sure Grovest will be forthcoming with all our contact details, and I look forward to hearing from you.
Good. Avi, please give your details. So if anyone wants to contact you, they can contact you directly and ask any questions that they may have.
A pleasure. It's quite an easy one. Avi, AVI, at sunstonecapital.co.za. Shoot me a mail and we'll be in touch. Looking forward.
Avi, thanks for joining us. Best of luck.
Thank you, Jeff.